Hello and welcome to the Montgomery Small Cap CEO series. Today, this is the first of two videos we're doing with Simon Owen, CEO of Ingenia. Simon, welcome to the CEO series.
Hey, here, Gary.
Let's start with an introduction into Ingenia's business.
Yeah, Ingenia was formed back in 2012 when we left we were previously an externally managed REIT. The name Ingenia actually comes from our legacy being part of ING and also the word ingenuity, and we brought those two together. So we're a REIT. Our market capitalisation is about $1.5 billion, and we specifically focus on two aspects of the Australian property market. Firstly, on seniors housing, and more specifically on lifestyle communities, or sometimes referred to as manufactured housing communities, and secondly, on holiday parks. So within our seniors housing business, we own our lifestyle villages, which is where the resident owns the house. We retain the freehold ownership of the land and they pay rent. We also own 26 seniors rental villages where we own the land and the buildings, and our residents who are predominantly on the pension pay us a weekly rent. And we are also, as I noted, one of the largest owners of holiday parks, primarily located at the moment in Queensland and New South Wales. But we're also about to close on our first holiday park down on the coast in Victoria, which we're very excited about.
Fantastic. Well, a good introduction there. Now, let's talk about some of those businesses. Let's start with that thing that we're all looking for, holiday. Let's talk a little bit about the holidays business and I think the lifestyle parks business. Let's explain some of the main revenue streams there if we can, Simon.
So in the holidays business, Ingenia owns and operates 21 holiday parks on the New South Wales and Queensland coast. At the moment, we range from, we've got a large holiday park up in Cairns down to the very south coast of New South Wales down at Bermagui, and pretty much located between those two, I guess, bookends. We have two main clients in the holidays park market. That would be families with kids, such as my own. So during school holidays, Christmas, Easter, parks are extremely busy with young families. Typically, our parks are located within a couple of hours of a major city. So they're largely all drivable from Sydney, Brisbane, the Gold Coast, Newcastle. The exception to that is obviously up in Cairns. And then the second key market for us, which really is what attracted us into the holiday parks business to begin with, is grey nomads. So these are typically people who might be in their late 50s, early 60s or later. They hire a caravan, and outside of school holidays, they're travelling up and down the coast, often spending 3 or 4 months away at a time, and that's a huge and growing market. What we've seen during COVID has been really transformational for our holiday park business. So back in the early days of COVID, we had to shut down our holiday parks, and so we lost the entire Easter trade, which is probably our busiest couple of weeks of the year outside of Christmas. So we pivoted that business into providing affordable rental accommodation in the communities where we were located. So we were able to still capture some cash flow, which meant that we didn't have to let any staff go. But since particularly in New South Wales and Queensland, since sort of early June, the market's really exploded, and the demand for affordable, accessible holidays in Australia, particularly beachfront holidays, is growing almost exponentially. And so our forward bookings through Christmas and Easter next year are up 70% on last year's record numbers. So
wow.
The amount of people who ring me up and say, is there any chance you can get me into one of our parks for Christmas? And I say, well, maybe Christmas next year, but definitely not Christmas this year. So the main drivers in the holidays business is our level of occupancy. and the rate that we can charge for our caravan sites or the cabins. And then we do own some ancillary businesses. So we own 4 food and beverage outlets, but the vast majority of that income is through the rent that we collect from people who are staying in our holiday parks. And the outlook for holiday parks in Australia in the backdrop of COVID, and last year 1.2 million people travel on a cruise. Australians travelling overseas last year spent around $65 billion travelling overseas. That money's now, or a significant portion of it's been spent domestically. So we've been really strong beneficiaries.
Sounds great. Now let's talk a little bit about that retirement living development business and also some of the big picture trends that you see powering that business along, not just in the short run, but in the medium term too. If you could frame us how that business has got some tailwinds, that'd be fantastic.
Yeah, so I guess Ingenia was one of the first groups to move into what we call lifestyle communities, which is where we separate the ownership of the home and the land. And what really, focused my attention on that market is that around 72% of Australians who are over the age of 65 own their home outright. But they typically have superannuation of around $100,000. So the vast majority of their equity is tied up in the family home. Often they haven't, because compulsory superannuation only started in, I think, 1991, and people haven't often had a chance to accumulate significant cash or capital outside of the family home. So we were looking for a seniors housing model that enabled retirees, and our typical customer age is around 65, to access some of the equity in their family home to still receive the pension, and to use, releasing some of the equity in the family home to fund a much more comfortable retirement. So the typical community, we're selling homes for around 65 to 70% of the median house price. Our communities are typically in the outer ring metro location. So we have quite a number of communities in Brisbane and Melbourne, unfortunately nothing in Sydney at the moment, or they're in attractive coastal sea change locations such as Port Stephens in New South Wales, or up in Hervey Bay up in Queensland. So the retiree, they sell their home for say $600,000. They invest $400,000 of that equity they've released buying into one of our communities. And then that $200,000 difference, which is the difference between selling their primary place of residence and buying into our community, they can use that to supplement the pension and to enjoy a much more comfortable retirement. Because I'm sure, Gary, many of your listeners who rely on the pension, that's pretty challenging without having the ability to supplement it with additional savings.
Yeah.
So in the market in Australia, there's about 130,000 people living in this style of community. We've done a lot of research looking in the US, where around 19 million Americans, or 6% of the entire population of America, live in this style of community. So we see there's a significant runway for growth. The way that Ingenia makes money in this style of business is really in 2 ways. Firstly, we are the largest developer of these land lease communities in Australia, and we have 9 communities under development at the moment, and we're about to start our 10th down in Victoria very shortly. So we develop the communities and we build and sell the homes, and we make a margin on selling those homes. And then secondly, once the resident moves into the home, they're paying us on average about $180 a week, which is the land rental component. So that's the rent they pay us for having their home on our land. And in return for that $180, we cover all of the rates. We have typically a large purpose-built community centre with indoor and outdoor pools, bowling greens, gyms, cinemas. We have on-site management. We look after all of the maintenance in the community, all the gardens. And so it is really it's a luxurious lifestyle resort for our residents, but it is highly affordable. And so this is a really fast-growing component of the Australian retirement sector at the moment, and Ingenia is right at the forefront in leading that, that growth.
Fantastic. Demographic tailwind. Now, as part of that journey of realizing equity, I guess there needs to be a robust or capable house market so that equity release can happen. Can you, obviously we can see what's going on with the backdrop for interest rates, not just here in Australia, but globally. So the outlook for house prices in Australia, it's an important characteristic in that downsizing or sea change type move that you described there earlier. Can you give us a sense of how important interest rates are in keeping that opportunity for house prices open to allow that downsizing move to happen? Give us when your customers are going through that big decision to monetize or equitize the value of their home, give us a sense of that journey and what needs to happen so that we can see those factors that would occur through the mind of one of your customers.
Look, we're obviously correlated to what happens to the Australian residential housing market, but our model is surprisingly resilient because our customers, when they're selling their home, they own that home outright, typically with no mortgage. They're selling their home typically in an outer ring metro location, and they're selling their home to someone who's either a first home buyer or an upgrader. So our residents aren't selling homes in high-rise apartment towers. They're not selling their homes to overseas students. So, the market is surprisingly resilient. And I can remember back, into 2019, back before we had the last federal election, and there was the outlook for the Australian residential housing market was pretty weak back then, until the coalition was, surprisingly returned. And even during that softness, we were still having a record year for settlements. So, our model is surprisingly resilient. There's no doubt that seniors, when they come to sell their home, and this is typically going to be the last time they undertake a major property transaction, they do want to be, I guess that they are cautious. So if they feel that, the housing market's weak or the outlook's weak, that may cause some residents not to sell. But on the other hand, we have seen that it can be a catalyst where residents think, well, the market's not going to get any better, so I'm going to sell now. So, we definitely sell more homes in a rising market, but even when the market's flat or coming off, the model is surprisingly resilient. I guess, Gary, what we've seen in the last probably 6 months is that our communities that are located 2 or 3 hours north or south of a capital city are experiencing the strongest growth that we've ever seen. And on the other hand, our communities in Melbourne or Brisbane, demand is a little bit more muted. So we are absolutely seeing a sea change desire from retirees to sell up out of the big capital cities and move to a coastal location, particularly somewhere where they've holidayed maybe with the kids for the last 20 or 30 years, where they've got an existing network and they feel comfortable. So we're really seeing very strong growth in those coastal markets, such as Port Stephens, up at Coffs Harbour, and also in Hervey Bay.
Fantastic, Simon. Thanks for your time.
It's always great to have a chat, Gary. Thank you so much.